Hi, this is PR Sundar. Welcome to question and answer session. First question, Mr. Rahul. If I have hedged position and on Thursday I want to remove the bought option, so will my short option position will be auto squared off? I think when he says Thursday, I think he means expiry day. Let us say you have sold an option. If you are selling a naked option, it involves a lot of margin money. To reduce the margin money, let us say you are buying an option far out of the money. Then your margin will be very, very less. In case at any point of time you are squaring up the buy option, then your sell option become naked. The naked option, it involves a lot of margin money. So this is the case on all other days. But since he specifically mentioned on Thursday anyway it's going to be expiry. So if the buy option is squared off, then the sell option becomes naked. So during the intraday, you may require more margin. Maybe you got some intraday margin from broker if margin is not an issue. So his question is, what will happen at the end of the day if I do not square off? He did not mention whether he is taking the position in index option or stock option. If he has taken the position in index option, then there is no issue. It will be cash settled. If he has taken position in the stock option, again the next question comes, whether that stock option closes in the money or out of the money. If it is out of the money, it is going to expire worthless. But if it is in the money, then there will be no auto square off, and that will result in physical delivery. If you have sold a call option and if that comes in the money, you are not squaring it up, so you have to give delivery. If you have sold put option and if that becomes in the money, if you are not squaring it up, you have to take delivery. So therefore, the best suggestion from my side is that you square off all the positions yourself. Don't let the options being squared off by the exchange. Next question, Mr. Ravi Iyer. I am holding long CE in one stock which has gone into F&O trading ban. CE likely to go deep ITM. There are no buyers. How to exit? How will broker square off in view of margin requirements? Kindly guide, sir. One thing is that first try to avoid trading in stocks that keeps coming under trading ban. In fact, my best advice is that unless you have 1 crore and above, don't trade in stocks. Trade only in indices. You all might have seen I have taken a position in Infosys which has gone terribly wrong. I had to pump in 15 lakh rupees more in order to firefight and to come out of the problem without any loss. In fact, I made more than 20,000 profit. That video I will be posting it later. So if you are trading in stocks, if things go wrong, you need to do some adjustment trade that involves huge margin money. So better don't trade in stocks. Even if you want to trade in stocks, then trade in Nifty 50 stocks, high liquid stocks. If you trade in some smaller stocks, many times they all will be coming under trading ban and then you can't do anything. Coming back to his question, if you have sold the option, if you are talking about there is no liquidity, the same problem will be for the buyer also. The physical delivery is not only for seller, the physical delivery is for buyer also. At least, option seller, we can reasonably assume he has got enough money because option selling involves a lot of margin money. So people with more money only come. But option buyers are not like that. Most of the option buyers, they have only 5,000, 10,000, they go and buy the option. But if that results in physical delivery, he has to pay 5 lakh, 10 lakh. So therefore, there are n number of sellers and n number of buyers. and the problem of illiquidity, physical delivery, all the problems is same for both of them. So therefore, before expiry, at some point of time, they will come and create liquidity. In case if there is no liquidity, unfortunately, you have to pay the price. Whatever is the price available, you have to buy. And if not, that will be going for physical delivery. Again, there will be lot of problems. So my best advice, don't trade in stocks. Even if you trade in stocks, stick with stocks like Reliance, State Bank, HDFC Bank. So these large cap stocks will never come into trading ban. Mr. Shivam, please update a new margin rule from August 1 about pledging and unpledging. I will do a separate video on this because this is a big topic. I will do a separate video. Next question, Mr. Gokul, is there any way to pledge the 5-year REC bond in which I have invested the amount I got by selling my land to save capital gain tax for selling option? The answer is surely no. Very simple thing. What are the things you can give for pledging? You give something for pledging and then something goes wrong. You did not pay the money, then the broker or exchange will have to sell your collateral immediately to realize the money that you owe. REC bond which you have invested, it cannot be liquidated because there will be a lock-in period. Some people ask me this question also, sir, can I give my apartment as a collateral? Okay, you give apartment as a collateral, tomorrow there is some loss, you are not paying the loss, but your counterparty must get the money tomorrow. So do you think exchange can sell your apartment and then pay the counterparty immediately? Highly impossible. So anything that cannot be liquidated immediately cannot be given as a collateral. Your house property cannot be given as collateral. ELSS, equity linked saving schemes, cannot be given as a collateral if it is within the first 3 years. After 3 years, it is okay. And then REC bonds, you cannot give as a collateral. So please remember, the rule is very simple. Anything that cannot be liquidated immediately cannot be given as a collateral. Sir, Nifty or Bank Nifty future position which is not squared off on expiry day, will exchange close it or delivery is mandated? Nifty swing trader. Okay, so his profile name is a trader, but he is having this kind of doubts. I have stated many times clearly that the physical delivery concept is only for stocks, not for indices. Indices are cash settled. So therefore, nothing to worry if you are trading in Nifty and Bank Nifty. Next question, Saravanan Ramalingam. Hi sir, there is a workshop in options for capital of 3.5 lakhs. If so, please provide details. If not, please for medium capital traders like myself. Mr. Saravanan, let me tell you one thing. 3.5 lakh rupees capital is a too small capital to play in futures and options, especially on the selling side. So I will advise you not to venture into options trading with this kind of capital. I took an Infosys trade. If I had left it, the loss would have been about 1.5 to 1.6 lakh rupees. I don't want to make such a big loss. I had to pump in additional margin money and I had to take some counter positions in order to come out without a loss. And in my personal opinion, if you have got less than 10 lakh capital, better don't come into option selling. So just invest in some good quality shares in the cash market and live peacefully. Next question, Mr. Shaikh Muhammad. How many years it will take to become a successful trader in options trading? There are some people who have become successful traders within few months, and there are some people who can never become a successful trader. So it is not everybody's cup of tea. So I cannot say 2 years or 3 years, one can become a good expert. No matter how many years you give me a training, I can never become a soldier. So because it is not in my blood. So therefore there is no standard answer for this question. It all depends upon your skill set and many other things. Next one, Mr. Venkatesan. Hi sir, if I buy Bharat Bond and keep it till maturity, will I be benefited from both price movement and annual interest? That is his first question. Bharat Bond, they are not paying interest annually. It is a cumulative bond, which means if you are buying a 10-year bond, at the end of 10 year only, you will be paid your principal plus interest. Now why the bond price is going up? There are two reasons. One, the interest component. As the time goes, the bond value will increase because the interest component is there. And second one, normally in the economy, when the interest rate goes down, the bond prices will tend to go up. When the interest rate in the economy goes up, the bond prices will come down. So therefore, whatever is the price fluctuation, you can enjoy. But remember, that price includes the interest. Yes, one more question. My broker says 50% of the value will be considered as collateral. Is that the case for all? Kindly address my query, sir. Let me give a detailed answer. When you take a position in futures and options, you have to pay margin money to the exchange. That margin money you can pay by cash, or you can pay some part by cash and some part by collateral. The NSE rule is that whatever is the margin money that you are required to pay to the exchange, minimum 50% of that should be the cash component. The maximum 50% can be collateral component. Bharat Bond is considered as a collateral component. So whatever is the exchange obligation, 50% of that can be adjusted against the Bharat Bond collateral. The remaining 50% must be in the form of cash component. Again, what is cash component? Cash is also a cash component. Fixed deposit is also a cash component. Liquid funds is also a cash component. And liquid Bs is also considered as a cash component. So the general rule is that you pay 50% cash component, 50% collateral. Bharat Bond is a collateral. So hope this is very clear to you.